CNBC-TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnin and with me is Shruti Mishra. And from the Bangalore studio, as always, Ritu Singh. These are the top headlines from the startup world. EdTech major Byju's founder Baiju Ravindran is in talks to raise his stake in the company to as high as 40%. As per Bloomberg, Ravindran is looking for funds to finance the buyback. According to estimates, this could be 15% of the company's shares.
Nexus Venture Partners is in advanced talks to raise a $700 million fund, the second biggest such pool to be garnered in the country in the past year. As per Reuters, the funds will be used to invest in domestic and US-based technology firms. The fundraising will close within 2 months, the report claims.
Setback for Google. The company appellate tribunal refuses to stay the 1337 crore rupee penalty imposed by CCI on the tech giant, says economics can't be allowed to run astray, orders the company to pay 10% of the amount. Google hints at moving the Supreme Court to challenge the NCLAT order.
Nadella expects the next 2 years to be challenging for tech companies after the pandemic-fueled growth, admits that Microsoft is not immune and says tech sector must look inwards to boost efficiency to remain competitive.
Apple's stock market value shrank sharply, leaving it below $2 trillion for the first time since March 2021. The sell-off came a year after the iPhone maker became the first company to reach the $3 trillion market capitalization milestone.
Chinese regulators approved a plan by billionaire Jack Ma's Ant Group to increase the amount of registered capital for the company's consumer unit to 18.5 billion yuan from 8 billion yuan. Ant will still hold a 50% stake in the consumer finance company, according to the announcement.
Sam Bankman-Fried, the founder of the bankrupt cryptocurrency exchange FTX, pleads not guilty to fraud charges. 2 of his colleagues have already pleaded guilty and are cooperating with investigators.
Twitter decides to permit cause-based advertising on its platform to facilitate public conversation around important topics. Also plans to expand the forms of political advertising in the coming weeks, a reversal of its 2019 ban on political ads. The social media company says it wants to align its advertising policy with that of TV and other media outlets.
Well, those are the headlines that we're tracking for you today on Startup Street. But on what's brewing today, BharatPe has reported its FY22 numbers, and while its operating revenues have more than doubled, its losses have more than tripled in the financial year. It reported a 5,594 crore rupee loss for FY22, which rose by more than 3 times from FY21's 1,619 crore rupees, even as its revenue grew 169% during the year. Now, BharatPe said the total loss of close to 5,600 crore rupees included an extraordinary or a one-time item which pertains to a loss in change in fair value of compulsory convertible preference shares, or CCPS, amounting to 4,782 crore rupees, without which the loss have been a little over 800 crores. Now, excluding this, the operating loss, like I said, would be 811 crore rupees for the year. The total assets under management grew to 1,553 crores in FY22 compared to 702 crore rupees in the previous year. The total expenses also more than tripled in the financial year to 6,129 crore rupees, which includes the notional loss as well, without which again the expenses would have looked lower. Now, BharatPe said it facilitated disbursals of more than 4,500 crores in the financial year ending March 2022, and it is on track to do more than 15,000 crores of disbursals across merchants and consumers in this financial year. The startup also added that it remains on track to be operationally positive in the next few months.
Ritu, thank you for those details. And moving on, after losing a 40 crore rupee viral content company overnight, Vinay Singhal and his co-founders went on to create a Netflix for Indian dialects called STAGE. A dialect-based hyperlocal OTT platform, STAGE has now raised 40 crore rupees in its Series A funding. The round was led by Bloom Ventures with participation from NB Ventures, Dholakia Ventures, TSM Ventures, V Founders Circle, Mumbai Angels and others, along with existing investors. To talk to us about the road ahead at STAGE and the $15 billion OTT market, joining me now is its co-founder Vinay Singhal. Vinay, welcome to Startup Street. Now, you along with your co-founders built Witty Feed, which was a viral content company. It went kaput overnight. You then went on to build STAGE. First, what has been the big learning, Vinay? And then tell me how you came up with this idea of creating a dialect-based hyperlocal OTT platform. What opportunity did you see?
Thank you, Shruti, for having me on the show. The learning is very simple. Don't build a company based on a third-party dependency. They can kill you overnight, basically. As simple as that, right? Talking about Stage, the idea and the thesis is very simple that we're chasing at Stage, which is that, see, you look at all the OTT market in India, all the OTT players, they do language-based content. Hindi, Tamil, Telugu, Marathi, Punjabi, Bangla, Gujarati is usually what you'll see, right? I grew up in Haryana, a very small village in Haryana, and I grew up speaking Haryanvi. There was no content in Haryanvi at all in early 2019, and we were like, why? Which is when we discovered this insight that in India, language is an urban concept. The moment you go beyond urban settlements, everybody speaks in dialects. And so if you really want to create a content company which is hyper-local, which is for Bharat, it has to be a dialect-based content company and not languages. So looking at that opportunity, we're building Stage, which is, like you said, a hyper-local dialect-based OTT platform.
All right. Vinay, like you said, you launched Stage in 2019 and it currently has over 225,000 paid subscribers across Haryana and Rajasthan, and it is growing at 30% month on month. What has led to this growth? And also, if you could elaborate on your offerings, what kind of content do you make and how are they unique?
Yeah. So I think, so second question first, the content that we make, the thesis is very, very simple. Local content, local artist, local audience without any pressure of trying to be relevant for everybody else. So we create content in Haryana which is relevant specifically for Haryanvi audiences, right? So for example, we have a web series called Group D, which is around the fact that in Haryana, if you don't get a government job as a boy, you don't really get married, easily. And so we created an entire web series around it, which went viral in Haryana. Bollywood probably would never be able to pick that topic because it is not relevant outside Haryana, yes, but we did, right? And which is what is working for us. And this entire growth engine that we have cracked is also primarily because we are able to, we are able to focus on something which is very unique, which is close to people's heart, that we create content in their own local dialect, in their own local culture, and that's what people love.
Okay, so Vinay, what is the revenue model? How are you making money? Are you an ad-free platform, and how competitively are you priced? And most importantly, by when do you hope to turn profitable?
Of course. So we are an ad-free platform, completely ad-free platform. We are a subscription platform, so a premium position platform. And that's one of the myths that we're trying to break through this, which is that everybody believes Bharat doesn't pay for content. When you want to do for Bharat, you have to put intrusive ads on your app to monetize and so on and so forth. Our belief is that Bharat wants to pay for content. It's just that nobody has created enough value for them. Nobody has created content that really makes sense to them. Okay. So, which is why, like you said, we are now at 225,000 paying subscribers. We have 3 different plans: 3 months, 6 months, and 12 months. 199, 299, and 399 rupees. So we are very competitively priced. It almost comes down to as 1 rupee per day sort of a pricing, right? So not so much as well. And we're getting amazing response from the users there. On your profitability question, we are actually already breaking even on our dialect in one particular market. So if you look at only Haryana as a market, we are very close to breaking even. Probably by next quarter end, we will be breaking even in that particular quarter. But because we keep launching new markets and there is a certain head start that has to happen in a market, we have to invest in creating content and getting a certain user mass in a particular dialect. So we do have to keep investing. So as a company, we turn profitable 3 years down the line from here.
All right. Vinay, let's talk about the fundraise. If you could take me through the fund allocation plans. You're looking to just go deeper in Haryana and Rajasthan, or will you also be expanding in other states as well? Also, there is a target. You aim to launch in the top 20 dialects of the country by 2027. So basically reaching to over 200 million households. What makes you bullish, and how do you, of course, plan to compete with the domestic players or the big boys like Netflix or Amazon who have deep pockets?
Yeah. So yes, with the current fundraise, the plan is to focus on Haryana and Rajasthan. The market is very huge. Haryanvi is spoken in about 8 million households. Rajasthani is spoken in about 25 million households. So they are very large markets, and we plan to go very deep in them for next 12 to 15 months. And after that, of course, we will be in the market to raise a Series B, and we will be raising money to launch new dialects. The idea is to cover the top 20 dialects by 2027. How do we plan to compete against Netflix, etc.? We actually don't. We don't want to compete with them. We don't compete with them at this point in time also. see, they do language-based content, they do Hindi content, which we'll never do, for example, right? So we have found our niche in the markets which are completely untouched by any other player. So much so that there is no supply also before us. For example, in Haryana, Rajasthan, we have literally created an entire Bollywood from scratch in both the places, and created an entire industry from scratch over there. So we plan to stay in our lane, and these guys can continue to build for the mass language audiences, where we will continue to build in niche markets which are blue ocean and completely untouched.
All right, so it's a $15 billion opportunity, and you believe that hyper-local is the future, and we wish you the very best with all your growth plans. Many thanks, Vinay, for joining us on Startup Street.
Thank you so much, Shruti, for having me.
From one fundraise to another, rural household-focused lender SarvaGram closed its Series C funding round at $35 million, led by venture capital fund Eleva Equity. Other investors that participated in the round were Elevation Capital, Temasek, and TVS Capital funds. The company last raised $10 million in its Series B round in February of 2021, led by Elevation Capital and again Eleva Equity. Now, the Mumbai-based startup operates a data science-enabled platform that offers users personal loans, gold loans, consumer durable loans, farm loans and business loans. Joining us now to discuss this further are Utpal Isser, the co-founder and MD of SarvaGram, and Jyotsna Krishnan, the managing partner at Eleva Equity. Thank you both for joining us on the show today. Utpal, let me start with you. You cater to the credit requirements of India's rural households. So what are the products that you have on offer, and how is it different from what other fintech players have?
Really look at the definition of a product, we understand this as the end use to which the ultimate household puts it to. As far as we are concerned, we take a very horizontal approach to the household, looking at 360-degree appraisal of the household and finding out the minimum resilient surplus that the household puts on the table. And then whatever the end use they want to put this money to. It could be to build a house, it could be to build infrastructure on their farm, or to build infrastructure for their animal husbandry, or to set up a business, or for that matter, to send their daughter to college in the nearby town or the nearby metro. So that's essentially what our whole product proposition has been.
Absolutely.
Select the household carefully, do the appraisal, and then lend money for specific end users that the household needs to improve their productivity or lifestyle.
Right. You've raised $35 million. If you could quickly tell me, how do you plan to use the funds you've raised? Growing your loan book is obviously on top of the agenda. Take us through the plans.
So our biggest investment is going to be in building the platform which puts all of this power into the hands of the customer. See, today, over the last 3 years that we've been operational, we've built a successful hypothesis in lending across many other services that we provide to the household. Now, a lot of this is inside SarvaGram. This needs to be put out into the hands of the customer so that the ease of use and the access becomes that much more democratized. And that is going to be our single largest deployment of this fund, essentially to create a marketplace and a product platform across categories for the rural middle class households. We are also investing very significantly in building a very thick data and analytics layer, something that we do in part today, but there's a lot of way forward on this one. These are data-rich households that we're talking about. And over the last a decade or so, the amount of data footprint that these households leave in the formal sector can be very well read, analyzed, and projected. That's going to be our second big use. And of course, we're going to be increasing our distribution across more and more states of the country. And as you said, growing our asset as well as loan book.
Right. And can you quickly tell me how the role of technology works in your business, and how are you leveraging tech to build it?
So you could, either take a vertical view or you could take a horizontal view. We take a household-centric view. Now, it is the same household, which today, for example, is looking for a loan to build a house. Tomorrow would be requiring mechanization for their agricultural practices. Day after tomorrow, if they have an extra surplus, they would be looking to make an investment. If you take a household-centric view, there is no platform in the country today which services these households across categories. And that essentially is what our vision is, to be able to create a marketplace across categories for these households. That is technology to us.
Right. All right, Jyotsna, you've been waiting by patiently, so let me bring you into the conversation now. You've been investing in SarvaGram for a bit now. Talk to us about what's making you bet big on the startup. What are the synergies that you see with them?
So Elevar's thesis does go deep into a customer segment that's a large part of the India emerging market population that actually relies on informal products and services for essential needs as well as for their income, right? And that population is really aspiring for quality brands and growth. It requires a very different DNA to actually address that population. It's not something that large existing corporates can do. And so we're very excited to back founders like Utpal who step out of larger corporations to start companies with a DNA that caters to that customer segment. And our strategy is to double down and go deep on companies where we have conviction. So we're quite excited about this latest development as well.
Okay, so you're excited about the latest development and you want to double down on it, and they cater to rural India specifically. So what's your take on the Bharat opportunity and what's most exciting about it?
What I find most exciting is rural India has tons of households that are very entrepreneurial. They're entrepreneurial because they have multiple sources of income. They're entrepreneurial because they're seeking growth. They make all the decisions that startup entrepreneurs do, and they're willing to invest for their growth. That offers a massive opportunity for emerging markets like India. And actually, it's very difficult to even articulate the TAM around these markets.
All right. And Utpal, let me come back to you in the business. You currently have 50 outlets across 8,000 villages and you want to grow these outlets. Talk to me about your expansion plan. Also, you want to grow your on-ground franchisees, the SarvaMitra, threefold across various states. So talk to us about these plans.
Okay, so we have a very, very strong method of selection of geographies where we operate, which is essentially based on our PIN code level calculation of credit to deposit ratio of that area, and of course the credit quality and overall affluence of that area. In such areas, we set up our own outlets to serve a population of about 100,000 households with our own infrastructure, and then create a network of franchised outlets at the village level, which is run and operated by a local entrepreneur who is part of the ecosystem that we choose to work in. So we have our own, hands and feet on the ground, as well as local entrepreneurs who are franchised outlets of SarvaGram. Over the next 4 to 5 years, we intend to get to about 1.5 million households across the length and breadth of the country.
Right.
And that would need for us to set up about 500 of our own, outlets, and about 8,000 of SarvaMitras, who are essentially an extension of SarvaGram at the field level, at the ground level.
All right. All right, Utpal, Jyotsna, we're completely out of time. Thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you very much.
Thank you.
On that note, it is time for us to head into a short break. But coming up next, education fee financing startup Financepeer is looking to tap 5 million students by 2025 from over 2 million currently. A special conversation with the company's founder on the other side. Stay tuned.
Now, education fee financing startup Financepeer is looking to tap 5 million students by 2025 from about 2 million plus currently, and expand beyond the metros to Tier 2 and Tier 3 cities to expand and strengthen its network. Founded in 2017, the fintech provides interest-free EMIs to finance education fees for students and collects commissions or fees from educational institutions. It has raised 2 rounds of funding so far, with the last round of $31 million in April last year. Joining me now to talk about the company's outlook for the year is its founder and CEO, Rohit Gajpeye. Rohit, thanks very much for being with us here on Startup Street. If you could start by briefly telling us about your business model. The students and parents get zero interest EMIs, but you charge a small commission from the colleges. Are there other sources of revenue as well?
Yes, absolutely. So for us, the ultimate aim of the company is to provide access to quality education to the students. And what we realized from what we witnessed was that financial restriction should not be a large barrier for them to pursue a quality education. And for that, our business model that starts with on a zero-cost EMI structure is a subvention pattern. So if your fees are kind of 100 rupees, for example, and if you want to pay that fees upfront to an institution, the education institution is willing to give a discount to any parent without Financepeer as well. We have just taken over that aspect because parents don't have enough liquidity. So on behalf of the parents, we pay the fees upfront to the education institution on day one. But instead of paying 100, we'll end up paying 92, 93 to them. And we collect back 100 from the parents. So for the parents, it becomes a zero-cost EMI essentially.
Rohit, what's your current loan book like and what kind of growth are you anticipating in this year? And also, if you could give us a sense, besides the loan book, of your margins and average ticket sizes.
Yeah, so on an average, if you look at year on year, we have seen different tractions, right? So when we started, average ticket size was above 100,000 INR. But back in 2019, we were working with around 24 institutions. Then next year, we worked with 600, then with 4,000. Today, we are working with around 11,000 institutions across the country. We did around $100 million of e-disbursements in the previous year. So it went from around $500,000 to $3 million to $10 million to $100 million with around 4,000 institutions. So this year, as we are dealing with active 11,000 institutions, we should cross roughly around 3 times of that this year. In terms of margins, typically the revenue that we earn is from the lending side. So not giving you the exact number, but the idea is the discount that we earn, which is on an average around 6-7% from the education institutions, we earn that along with the lenders. So we split that with our lending partners.
All right, so no word on the margins, but on a steady trajectory for growth there. But we've seen some concern, Rohit, on asset quality for education loans. And I'm talking about traditional banks where NPA levels are far higher than the overall average, almost 8% in some cases. What is your sense? I mean, what kind of default rates are you seeing in the loans that you have? And are they different in different categories? For instance, the lower ticket sizes perhaps have higher defaults than the larger ones.
Yes, absolutely. It is different because the quality, the kind of loan, the type of loan is also different here. So when Financepeer deals with the education loan, this education loan is very much different than the education loan that a bank deals today. So I'll tell you first the traditional mindset of an education loan. So when a bank talks about an education loan, it is of 2 types. One is a moratorium-based loan where students start paying after their education is completed. And the second is the loan that the bank gives to the school itself. The parent is not the end loan taker. But when Financepeer comes into picture, we essentially are not giving loan to the school or an institution. We are essentially giving that loan to the parent, right? So this is how we mitigate. We mitigate the risk between the parents. And second is we pay 1-year fees in equal installments. So it's not a moratorium-based product. So this is very different from what a traditional education loan was. It's for your core education. Even if you're a K-12 kid in the 5th grade or 6th grade and you have, say, 1 lakh rupees fees to be paid, that you can pay 8,000 per month. So that's the product that we run. And this product has not seen much default during the COVID times as well. So for us, overall NPA has been far below 1%. So it was around 0.6 to 0.7% during the COVID times, and it has dropped further from there. But the ones you are referring to, around 7-8%, most of them goes into the moratorium side, or if the loans were given to the education institutions because they suffered a lot during the COVID times. But the kind of loans we deal with, we are trying to mitigate the risk because the end parent is the loan giver for us.
Tell us how many customers or institutions do you currently have and how many are you adding each month and what is the target for the year ahead?
So presently we have around 13,000 education institutions across more than 9,000 pin codes, and every month we add around 350 to 400 new schools and colleges in the country. So that's the rate at which we are growing. We're trying to reach at a max of around 27 to 30,000 institutions. And after that, we're trying to go deeper into the education institutions. Okay. Of course, lending is the core, but we have many more products apart from lending. Since we are building an embedded finance structure, so we are getting our payment solution and card solutions for the students as well.
Okay, and Rohit, finally, I understand you plan to expand your service verticals and consolidate all the key education services under one roof. What are the plans on that front?
So here, what we're trying to do is we always envision this as an embedded finance structure, not just as a lending product. So when I talk about an embedded finance structure, it has kind of 2 key pillars. One is the IT or software, and the second one is the finance pillar. Under the IT pillar, we have our own ERP and learning management system, which kind of manages, digitizes the end-to-end operations of any school or college, like lead management, admission management, payroll systems, etc. On the finance end, we have lending as one product, we have fee payments as the second, and recently we have launched our card, which essentially converts an ID card into ID and debit card. So it kind of spreads the financial literacy. Okay. So in this sense, we are trying to cover an IT and software control of the ecosystem here. So essentially, it will have both legs. So any school or college will use our software.
All right. Unfortunately, we've run out of time. But Rohit, thanks very much for being with us here on Startup Street. On that note, we also have to wrap up this edition. But stay with CNBC TV 18. More news and updates continue.